Markets flash a warning sign, not just from one, but 3 sources. Is it time to reallocate? Stay tuned, we'll discuss this and much more. Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First up, don't forget you can click Show More for additional information and links for today's video. Also, if you find this video of value and you're looking for a different opinion than Wall Street, then please consider subscribing. So first up, we're going to go to the numbers. Quarter ending, not too pretty there at the end, to say the least. On the green side, NASDAQ, Dow, S&P mids all go negative. Smalls just hanging in there. Let's go to the big charts. Yes, I know I talk about hating to show the 1-minute chart that I do show during the day. It does give me an idea, though, of the overall trend. Remember, dumb money buys at the open, smart money buys at the close. So Friday, I was teaching a class last week and I said, do not buy on Friday. Why? Because it's a big distribution day, specifically for mutual funds and 401ks. By prospectus, they have to distribute that money. So we see a big surge on Friday with low volume, and then we see a sell as we head into the close. So not really a great sign heading into month end. Here's an article, The Dark Magic of Month-End Trades. I also have another white paper below that you can click on that talks about this topic. Now, looking at year-to-date, again, this chart continues to deteriorate. So many different sides here that we're looking at. One, you can see at the bottom, volatility still up in the 19 range. The next one is momentum. This is a clear and defined crossover on momentum, which leads us to our short-term signal being negative. Now again, we've not made a lot of moves on that short-term signal because it's been very choppy and we've been whipsawed a couple times. The other thing we see here, we retested but held the 200-day moving average. We can see it, and I'm really concerned we keep on testing that. And then you look at Friday's close there, and we just, like I said, sold into the market. So at this point, again, short-term signals are negative. How about the weekly view? Well, we showed this last week. We're seeing a lot of deterioration here as well. At the bottom, I have 2 signals, momentum and PMO, which is price momentum oscillator. Woo! Big word there, right? But again, true defined negative crossovers on both of those. So I really don't like where we are on the long-term view here. So midterm signals have gone negative. Now, as I mentioned, this comes confirmed from 2 other sources as well. Well, actually 4 sources, because I look at the charts and I have 3 other sources that we go through for that type of information. So again, we have not seen this negative signal since 15 and 16, December and February. Prior to that was 07, 08, and also 2000. So when we get a midterm signal that goes negative, we take that very seriously. Next up, monthly view. Last month, we talked about the hanging man, and I'll have Michelle zoom in there, but you can see it. We closed all-time high the month before, and last month we had a hanging man candle is what it's called, and not a bullish sign. Now this month, we closed lower. So here, we have a all-time high, lower high, lower high. All of those are not good signals. Now, despite that, our long-term perspective as of today is still positive, and you can see it. But you're also seeing at the bottom of the chart with momentum, it is in fact starting to break down. So signals again, short-term negative, mid-term negative, and long-term is still positive at this point. Let's look at market breadth. How are we doing overall? Here's your 200-day moving average. So we have S&P, NASDAQ, mid-cap, small cap above or below the 200-day moving average. And you can see holding up barely, S&P at 60%, NASDAQ under 60, again above 60 bullish, below 40 bearish in the long-term view, mids at 52 and smalls at 54. Excuse me. Let's take a look at the shorter-term view. Those companies above or below the 50-day moving average, and it is a capital U, ugly. Ugly right here. Look at the top. We are, in fact, under 40%, which gives us a bearish view. 35% on the S&P, 31% on the NASDAQ, 37 mids, and smalls are the only ones just above 40%. So again, these are companies above or below. So 35% of the companies, let me flip it around, 65% of companies, the S&P, are below their 50-day moving average. Not a good sign. NASDAQ, we've talked about this, continues to break down, and you see that obviously we have a lot going on with both Congress and other things with some of the big tech companies. So have to be concerned here about NASDAQ heading into this quarter as well. Let's get to the sectors. So the sectors, again, here we show the top 5 sectors representing 76% of the overall market. So we have NASDAQ, we know, is up, financials down, healthcare down, all right, consumer discretion just barely up, and then industrials down as well. So a little bit of a concern here, but most importantly, when I look at sectors and reaffirming our mid-term negative signal. U.S. equities, we track 11 different U.S. equity sectors. Only one is in an uptrend. Therefore, the whole sector is considered in a downtrend. International, only 14 of 53 are in an uptrend. Therefore, we are in a downtrend as a group. So you take that, you take it with the charts, and again, reaffirming our negative switch on the mid-term views. Next up on my radar. So, what do we have on our radar? Not much. We've been talking about oil and gas. We've seen a big breakdown here. This is the oil and gas titans, top 30 companies. We utilize something in the ETF space similar, so you see a lot of breakdown here. So I have a couple concerns heading into this quarter. We've liked oil. It's really started to drag, but I've seen some breakdowns here. Also, we see the dollar. If you get a stronger dollar, I'm worried about oil. We hit a double bottom here. Larry Kudlow likes a stronger dollar. We see it moving up if we break above here. So oil, we're removing it from our portfolios as we head into this quarter. Next up, gold. A lot of questions about gold. So if the market's breaking down, is it time to buy gold? Well, not yet. I'll have Michelle put a link here about a video that I did on gold, but you can see that trend line. We've had 2 failed breakouts. We're right on that line right now. We went up, and then at the end of the week, we failed again. So, not ready. We are going to raise some cash, do short-term treasuries as we head in this quarter. And if we see further deterioration, gold is one of those options we would add if we continue down this volatile path. But right now, we're waiting for that breakout. That being said, this shows you a long-term chart of gold versus the S&P, a relative chart. And you can see it's underperformed, as you would expect here, over the last couple years. But look at the bottom of the chart there. Have Michelle zoom in. we've had a breakout. So that's a good sign for gold, but still going to wait for that breakout overall. Next up, treasuries. Spreads. Treasury spreads. 10s minus 2s down. Despite big, heavy buying in the bond market last week, drove yields down. One of the few good things of the portfolios last week. But look at yield spreads down to 0.47. Very concerning. Now here, a lot of stuff going on here, but I have to show a long-term view on 10 minus 2s. And you can see at the bottom there, that green line is 0. So if we invert, go below 0, you can kind of see as treasury spreads get lower, kind of a leading indicator, and you can see it right there in the charts. One of the reasons why we continue to watch this and has us concerns. So, what keeps me up at night? Yes, again, that is me. You know, a few things here as we wrap it up. Number one, volatility up 80% from last year. Big spike on volatility. Obviously, that concerns me. And then the next thing is President Trump and big tech. And that is obviously a lot of things going on, right? You've got President Trump, we have the trade, we have what's going on there, and China just announced basically some of their tariffs coming back at us, and then going after big tech names, and another big social media name is being called upon by Congress. So you've got a lot going on there in this space, which, again, very difficult to manage political risk. So, finally, wrapping things up, fear and greed, down to 8. We have a description of how we get those numbers. Fear and greed down to a very, very low 8, which is a big fear number. A week ago, 9. Again, only one of our indicators are positive. So, short-term, mid-term have gone negative. Long-term continues positive. What does this mean? It means we're going to reduce risk heading into this quarter. Sit it out, see what happens, see if we get a better direction before deploying more cash as we go forward. So my favorite statement, although hated by many, great time to stay nimble, be open, and ready for moves. As always, thank you so much for watching. This is Michael Loftus for Wealth and Wisdom TV.